going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the last week and a look forward at what might happen in the next week. And some fun stuff in the middle. Talk about fun stuff. In this show, we have Trade It or Fade It. You'll enjoy that later on in the show. Really good stuff as our viewers share their trading ideas. This has been a week of more big chop. We'll call it even huge at times. Oil continued to pull the market around, well, by the nose, and it got much, much stronger as we anticipated in the middle of the week, and looking like it is a firmer situation for the oil market right now. Big shocker here as Japan on Friday, Bank of Japan, well, they go to negative interest rates, not anything that anybody's expected. What does that say about Abe and his three arrows? Well, total failure. This is typically what you get when you have a situation of the central banks coming in and trying to manipulate economies. And what they want to do, of course, is to lower the value of their currency so that they can stimulate their economy, essentially exporting their deflation out. So that gets people to want to park money in the U.S. currency because it's got higher interest rates. That's called the carry trade. Borrow at zero or negative interest rates in Japan, put the money into U.S. denominated bonds, and that all pushes money into the U.S. And we're seeing the results of that now. Of course, all the big banks in Japan, they if they want to put money with the Bank of Japan, they have to pay to do it. So that you can see how that could be stimulative. Of course, it's all fake. All of it's fake. So none of that really brings any organic growth. So you got to really blame the central banks for the situation we are in right now. I do that every chance I get. Bank of Japan now joins Sweden and Switzerland and Denmark and the UK, all the social democracies. Not only the UK, all of the Eurozone, social democracies in where the government, gives everything to the people and builds up these massive amount of debts until they can't do it anymore. And then it takes negative interest rates to try to stimulate the economy. Where do we go next? There's trouble out there, believe me, and despite the fact that the equity markets celebrate now on this, it's only a temporary situation. The Japan situation on their debt to GDP, 230%. I mean, that is just huge. And the private sector puts it at much bigger. And so that's just crushing. Interesting, Bernanke comes out and he says, well, now negative interest rates are in the toolbox of the U.S. Central Bank. That potentially says that we could get there someday. Well, maybe we can. And interest rates are falling, bond market surging on all of that going on with the Bank of Japan, and all this commentary from Bernanke, and all of this cheer as the equity markets go up for the possibility of this additional stimulus. I got to tell you, I don't think it is real. It'll last for a little bit in here, and we'll talk more about that later. But that's just a moment in time where everybody gets excited. Gold, silver, they go up and then pull back a little bit. We kind of expected, but it was overall a good weekend there. Stock market, a down day, an up day, a down day, an up day, and then the big up day, only up about 1% on the week. So not all that much to be celebrating about. Let's take a look at what that looked like on a 1-hour chart, and we'll see all of the things that influence the market here on our 1-hour chart, 24-hour chart of the ES, the E-mini S&P. And we'll start out by looking at Monday, and you could see the overnight trade in there, the gray area, and then the pit trading right in here. So that is a day that went to the downside. World markets overall were narrowly mixed. Oil market was weaker early in the week, and that weighed on the market. Iraq says it has record oil production, and that ends a 15% bounce on the upside in the oil market. Draghi comes out and he says ECB credibility is at stake. We must hit our inflation goals. That means more stimulus out of them too. McDonald's, they had a beat, record high on their stock. Gold, silver, a good lift of stocks in there because they rallied. And of course, everybody was looking at the FOMC announcement. U.S. stocks weaker overall. And then the next morning, we get this continuation on the downside as oil gets really hit. But then oil has a big reversal, and so does the E-mini S&P's index futures rally and continue all through most of the day. A little bit softer close in there. China plunged 6.4%. That was a huge decline, and Japan was down 2.3%. But it was all about this oil move in there that really caused everything to change in there. Everybody knew the FOMC brings rallies when those announcements come out, so they could not hold the market down, and you got that rally. There was talk out there of having a special meeting to deal with the glut. That's the OPEC members. Triple M had a big beat and helps the Dow early on, and metals and mining firmer. So you can see in there that we ended up with an update that kind of sold off late in the day right there. On Wednesday, well, world markets were narrowly mixed. You could see what happened overnight there as everybody eyed the FOMC announcement. Stocks, they reversed upwards in advance, figuring, well, FOMC always says something to lift stocks. But then they came out and said they're holding rates steady, concerned about the economy, concerned about world developments, and they then sold them really hard at the end of the day on Wednesday. That essentially was a massive buying opportunity. Who would have really known that? Boeing and Apple, they weighed on the Dow all day long after their earnings reports. Comes Thursday, after this big decline on the FOMC, world markets were really weaker overnight. Oil, though, surged, and that really lifted stocks to the upside. NASDAQ, well, went big on the upside too, as Facebook soared, and U.S. stocks, they struggled to hold any gains in there. As you could see, early gain in here ends up to get sold right in here, and they just chop the rest of the day. Well, comes the Friday morning and the big shocker. Japan goes into negative interest rates. Japan's up 2.8%, China 3%, Eurozone only up about 6%, and then they may edge it a little bit higher. Bernanke makes those comments about the Fed now being able to go to negative interest rates. Bond market jumps, dollar surges, ES up 23 points overnight on that Bank of Japan news, but then sells off again, but then buyers came in. You had the NASDAQ, well, lagging the big move, still up like 1.5%, but you see the stock market in here going all the way up here as we get into our final hour of the day as we do this on a powerful up move, and the stock market getting through some important resistance, and we're going to show you that when we look at the short-term view of the coming week later in the show. Let's look at our earnings and economic calendar in here and take a look at what is happening in the coming week. Here you could see still a lot of earnings coming out, some market mover potential earnings in there. On Monday after the close, we have Google. Tuesday before the opening, we have Exxon. When Tuesday after the close, we get Yahoo, which won't move the market too much in there. Wednesday, we have GM in the morning, and some stuff that I trade. Wynn Resorts right over there. We're not quite sure about that one. Notice the little asterisk. And we have some of the oil stocks, Oxy and Conoco. On Thursday, we'll be talking about Conoco in our Traded or Faded segment. And then on Friday, not a lot in there. Big potential market moving events. Well, we never would have really put oil in that category, but the oil really has been moving the market around. So that's on Wednesday at 10:30 Eastern. And then on Friday, we get the big employment number right there at 8:30 Eastern time also. So those are the big market movers. Take a little picture of this calendar and then hang it up on your desk, and you will have all that stuff right in front of you. That is it for the opening segment for Market Week, and we'll be back with the best of the week and worst of the week. For the best of the week, well, it's mostly earnings reports, but we certainly have had the metals show up as being good for the week. A lot of bounces in some of the depressed stocks, and you would figure that as the market starts to get some legs and people start to look for some value. But we'll look at some of the best stocks here. UA Under Armour, it is the winner of the week. 21% on the upside in a big gain. We're going to put up these weekly charts for you to see here, and you will see that Under Armour has been a big mover. Now, if we look at our cyclical patterns in here, you can see Under Armour was pointing to a low starting, well, it came a couple of weeks late for us, but now in this favorable rising period and now gotten up into this resistance zone. So Under Armour, a giant mover, and just the first week up of what should be a favorable period for the stock. You could see top of the resistance here, 34-week moving average, all around 90. So stock 84.30 right now, and this stock probably has some more upside in there. So we'll be a dip buyer in that one. As we said, we had some great gainers in the gold stocks, metal stocks. Newmont, which has been on our positive list and recently had a positive long side setup in there that we shared with our level 3 subscribers. You could see this big move in here. Full disclosure, I am long Newmont. And this one, look at this, comes right up and touches that resistance level at 20 in there. And that one looking nice. You know, this again is week 1 on the upside, and we've been favorable on gold. So we're going to look for only minor pullbacks and then continuing to move up. Really expect to see this 2160 to 2315 area, which is that higher resistance zone in this stock. So we think this is a favorable period for that in there. Also up 20% on the week, but ABX up 20%, GG up also 19%, Hecla up 15%, so the silver stock's doing well, and gold, GOLD, that's Rand Gold, up 7% on the week, and that one's got a breakaway gap on it, so put up that chart and you'll see a fantastic looking chart. So that is a good one. Another good one for the week, well, how about Facebook? 15% on the up week, and they beat big on earnings and revenues, and all the metrics really look solid. You could see the cyclical pattern in here, as you can see our cycle brackets in here measuring to the important lows. This low actually came about 2 weeks early for us based on this pattern, but you can see this nice cycle pattern right in here and moving on the upside. And for our chart subscribers, you did expect a low to form in here, right? And gets up here to the fib extension level right there. Let's take a look at that on the daily chart, and you will see as I come in from this 2-year chart, and you can see here that fib extension up there at about $114. So continuing to move up. You could see this is a breakaway gap here also, and this stock in good shape. A hammer bottom here on the daily right at our cyclical low period. You could see that as this was the corrective period, this is the rising period. Beautiful job right there. So we really did like that one. Another one we want to look at in the tech category, QLGC. That is Q Logic. Let's take a look at the weekly chart in here. This is a massively bullish chart. And you could see in here, this was the declining period. This is the rally period. Beautiful cycle action right in here, and moving to the plus side as they get up and test their 89-day moving average and falter in here. Let's check this right over here and you will see, no, they broke through the 89-day moving average, that's what I meant, and come up here and test this old high right over here. So you could see how that number was pretty important, and it comes right across here. You could see that, and then it pulls back on the day. But we're a buyer in this stock. We think it's a great pattern, and probably somewhere as it get maybe a little bit into this gap, we'll say 12.5 or 13. That's probably a good place to buy the stock. We're expecting this stock to break out on the upside. Another one we want to look at in here is HES, H-E-S. Now, we did a special on the natural gas stocks in our stock sector segment. So if you remember, you can see that. Look at this cyclicality in here and what we expected. Now, we have this group really to us looking like it's bottoming in here. And you could see this declining period right in here and this rally period right in here. You know, you see all this in a lot of these stocks, and it tells you that the stock market's probably in an area of an intermediate low. And we'll talk more about that later on in the show, of course. So this cyclicality that you could see bottoming in here and getting ready to move up. Resistance is up right around here, starting at about the $50 level. So there's a lot of room on the upside in this stock in HES, H-E-S, up about 5% on the week. Other stocks, other stock worth mentioning is Consol Energy. They're up 21% on the week. They've come up and touched their 89-day moving average. Resistance area, our buy area in there is at around the $6.60 number. So CNX Consol in the coal area, which is so beaten up, but everything you hear says that China is building coal plants like crazy. So I have a feeling, based on how the political winds blow, these coal stocks could do better. That is the best of the week, and we'll be right back with the worst. All right, for the worst of the week, well, again, earnings, some rumors, interesting stuff here to look at. We're going to start out looking at eBay, EBAY, of course. And this stock seems to have not been able to recover from its spin-off of PayPal. So eBay without PayPal, maybe not so good. Their earnings, they met earnings, but they warned. And you could see in here, we've been looking for a decline in here all the way through sometime around end of February, beginning of March. You could see these two there, they point to our low period right in here. So that is a stock that's been in a pretty severe downtrend, and this one, the worst of the week, at down 13%. Netflix, NFLX. Now this is an interesting one. In full disclosure, I've been buying the stock just these last couple of days. Why have I been doing that? Well, we're coming down to a key area. This is the important low area right there, about to get into even a minor rising period right over here, and coming right down over here to the weekly support right there. And that looks to me like a key area. Now, rumors out here that Apple is going to introduce their own competitive streaming video service, and that would come out when they announce the Apple 7 sometime in the fall, like September. So what is this stock going to do? Go to on the downside all the way through then? It's come from 133 down to almost $90 over here. I mean, that is a huge cut. And now you got to expect buyers to come in, and these cycle patterns say so. We're looking for a bounce to around 106, 107 that you could see right there. So that's why I've been looking at it. That could be a pretty nice recovery for this stock. Down 13% on the week, and I actually think it's a hoax. So I think the stock will do better. Now we're going to look at Juniper, JNPR, a stock that's down 11% on the week and has gotten, just buried in a period in here. And again, you can see we have a decline here into March right there, and we've had this negative period right here, and our patterns have shown it to be so. They beat on their earnings, but then they warned, and there is so much of that going on here. Next is a very interesting group that's gotten very beaten up. Let's take a look at Royal Caribbean Cruise Line, RCL. This pattern in here, well, you can see our forecast for our subscribers, which says that when it broke down under this level here, it had made an important top, and that it probably fall into sometime in February, get a fake rally, and then move down again. That's how this projection works here. So we have a major breakdown in here. What's this all about? How about the Zika virus? That's really what's gotten this one lately. People afraid to travel and get on cruise ships. Man, I was just on a cruise ship, and you got to look at CCL, Carnival Cruise, which also has gotten beaten up in here. Same kind of a negative pattern that we're looking at. And also, if we look at NCLH, which is the NCL Holdings, and that is also a stock that has gotten very beaten up. I just need to get NCLH up here, and that is, there it is. And you can see in here that it had also a similar kind of a breakdown, falls right here, gives you a bear flag, breaks under this level, and a lot of trouble. Double top that you could see in there, or an M top. And this one, just like the other ones, looks like sometime April or May before this big decline is over with in that group. And I think that that probably is going to be a major buying area there in April or May then, but I'm not in a hurry now. Love NCL. Man, we were on their cruise. It was fantastic. All right, next one to look at is Mosaic, MOS, and Potash. This Mosaic, interestingly, Potash JPM downgraded the stock this week, and Mosaic, that stock down about 8% on the week. I actually like these stocks at this level here. I think they are putting in a bottom. You can see right here in the Mosaic pattern that it's coming down to our cyclical low period. This is called nested bottom right in here, and the Potash is the blue right there. So these things tracking together, and both of them turning up in here. So liking Mosaic and Potash. Other stocks, favorable mention on the downside. Stratasys, SSYS, the 3D printer, that one due to bottom soon. US Steel, that one due to bottom soon. That's down 11% on the week. Stratasys down 12% on the week. American Express, man, another 8% as it follows through on a pretty bad earnings report, and we're expecting that one to get a bounce, but we're a seller about 56 or 57. Tesla moving to the downside about 6%. Model X sales in there, well, really a lot slower than they anticipated. That car is very, very high priced. No wonder. We talked about that a lot. And how about competition coming on? GM even. Before you know it, there's going to be a lot of plug-in 200-mile cars out there, or with 200-mile batteries, and GM says they got one coming out too. So, man, love the technology, have loved the car. It's a piece of art, really, when you look at the Tesla, but you got to know they're going to come at them, and they're not going to be the only ones with that technology, and they're going to suffer for that. The other couple favorable mentions in here, well, Boeing, that's down about 4%. They might have lowballed this earnings report. I see support in a couple of 2-3 weeks. Got one of my informed viewers out there telling me that this stock likely to outperform, or the company to outperform on their shipping in the coming quarters. So we're going to look for about 2 or 3 weeks for a bottom in there. Amazon, well, that stock gets hit for 8%. Even a little more than that after the earnings report. It was a big miss. It's only down 1% on the weekend there. We're going to look for a 560 to 600 range for a while in Amazon. That is the worst of the week, and we're going to be back shortly with Trade It or Fade It. And this is Trade It or Fade It. This is where you share your favorite trading idea with me. You tell me, well, what symbol you're looking at, what your analysis is, what your approach is. You could be a buyer or seller of the equity or the future, or doing some option trade or spread, and tell me your holding period. Sent an email out to all of my members, asked them to send me what their favorite trades were so that we could all learn from what they're doing and from each other, and then I would share that with you. I would do my own analysis and let you know whether I wanted to trade it or I was going to fade it. And so we got a lot of great responses. I'm going to share 5 of those with you. Wish I could share them all, but there's only a limit to the amount of time we could spend on it. So those of you, if you're a trader to fade it is not up here today, make sure you participate next time we do it. All right, get an email from James B. His trade, interesting one, is a pair trade between Facebook and Apple. Says that, well, Facebook's got superior upside momentum. He wants to buy that one. And Apple, he says, well, that's a laggard, and he wants to sell it. So buy Facebook, sell Apple. Price differentials not all that far apart. So you could probably do it 1-to-1. Let's take a look at this analysis in here. Here is Facebook. Showed this one in the best of the week category. And you could see in here, as we say, getting up to this strong area of resistance, this fib extension right up over there. It's had this move in here from 88-ish all the way up to 112 plus. So it's been a big move in a very, very short period of time. Take a look at Apple, AAPL, on our cyclical chart, and you will see in here that our expectation was that Apple was going to bottom in here and get a rally. That's these nested cycles in here and this period of potential upside right there. That Apple looks to me like it's going to get up in a bounce to, well, we'll call it right around 107 area in the stock, 106 maybe, so about 10 points upside in there. Boy, it looks to me like Apple's got more upside now than Facebook does when you look at that. You know what that means? I'm going to fade it because I don't think this is good timing on that trade. I think that trade is actually past. Next one we're going to look at, Kyle C. writes me, talking about Nugget, N-U-G-T. Nugget, well, that is a ETF, N-U-G-U-T, sorry, N-U-G-T. I'm going to get that one right. N-U-G-T. Let's put that up in here, and you'll see the chart. N-U-G-T. I'm going to say that just only not any more times. Here is Nugget in here, and when you take a look at that, you'll see it is a 3 times ETF. And look at this. Now, what are we looking at? We're looking at a pattern in here that shows, well, it came down from 544 all the way down to 25 bucks. Well, that isn't really true. Well, it's true based on the price, but this 3 times leverage has a natural built-in drag in it. So when you trade these kind of things, you got to be right, and it has to be a very, very short-term trade. Now, what Kyle is looking for in here is a trade that won't last very long, and what he says is he wants to wait like 1 or 1.5 weeks and then buy a 70 delta call at the time, and he says it's based on the GC gold short-term patterns. So if I go back and look at the short-term pattern in gold, he thought that the Nugget would get a rally up to the 89-day moving average. I'll show you that in 1 second. And we'll take a look at gold in here. And gold on a daily chart, and I'm going to show you this again in the short-term view, but we'll look at it right now just for the sake of this particular trade. Looks to me like it's got some week or week and a half on the downside based on this short-term pattern, and then up big again. So what he wants to do is thread the needle, buy it right over here, catch the 3-time, and do it by buying calls. So it's kind of getting a leverage on leverage if you're doing it with calls, huh? So that's where his entry is right over there. And if I go back to the daily on NUGT, you will see here that this pattern in here, well, it actually does get some rallies, and he thinks it's going to rally from around the area of the support on this upturn in the slim ribbon up to this resistance up here around 29 or 30. Well, if you can thread that ribbon, thread that needle based on that catching it at the slim ribbon, and then catch that trade on the upside in about a week and a half, you've got a good trade there. You know what? Because you did such good analysis on the timing of it, I'm going to say trade it. Now remember, this is a very short-term trade. You're threading that needle. You've got to buy it when you've got to buy these calls in the money When in Nugget, NUGT, when you get this next dip in the gold market and then catch the next wave on the upside. And yes, this is a 3 times volatility, and you're going to get a big move in there. So interesting on that one, Kyle. I like your thought process. You're playing with danger in here, but I'm going to go with it. So I like it because, well, I like gold, and I think a dip is a buy. Don E. writes me, and he's talking about COP. That's ConocoPhillips. Don bought some ConocoPhillips just recently, he said, and now he's talking about doing a covered right in there. Now, of course, long stock, short calls. That's what a covered right is. He says that he's a bit concerned. The RSI, MACD, those haven't turned up yet, so there's no confirmation in there on the upside. And the fact that is that when I look at my patterns in here, well, I'm expecting an upturn in the stock. So when I show you the weekly chart in here, you're going to see that, well, this looks like a bottom forming right in here. And of course, I think energies are, if you follow me and if you're a subscriber, you know that I'm bullish on oil, that I think we're entering a period of upside there in Conoco. So earnings coming, but I don't know if it'll make that much of a difference. Everybody knows that oil's been low, right? And then if I switch over here and look at the daily chart, we're going to put that up and move this in. You will see here a hammer bottom. Let me just move this text so that you can see it. There's the hammer bottom, the harami right over here, a W bottom, and this looking like it's bottoming. Now, we don't have a momentum upturn yet. You're right about that. Here's where momentum turned right down there on the slim ribbon, and now it's kind of stuck in there right now. So you're going to need to get some upside in there. But the truth is, based on everything that I'm looking at in here, a covered call, that's a pretty conservative play. I think it's bottoming. You want to do covered calls at the place where stocks are bottoming. I'm going to say trade it. I think it's a good one, and I'm liking that one. So thanks for sending that in, Don. Wendy S., I hate to show this one, but we really have to do it. This was about perfect analysis. And I know that, Wendy, you probably looked at some of my analysis in here. We had talked about the Japanese yen turning down. Well, if the Bank of Japan would have waited just till Monday, I would have showed you an absolutely fantastic trade setup in here that we would have said trade it. And I'm going to say right now, I would have traded it if we would have had good timing on it. But I'm going to show you right now what Wendy shared. She says that in the Japanese yen /6J, that it looked like it was at a point where it was ready to turn over. And it had what looked like a double top in there, had come up to some resistance area, and her tech read in there was negative. Here is the Japanese yen. In here we had cautioned that it was likely to move on the downside. The Bank of Japan, they want the yen lower because they want to stimulate their economy. They want to get inflation back, and they're insane. But forget about that. I mean, this was really a good read. Bearish engulfing here, dark cloud cover in here, big tail. This is called an upthrust as it tries to break out and can't, and then fails and then breaks underneath. All of this falling wedge right here. I mean, really good read, and everything said it was going to go down, breaks through all the supports here, and still more time to fall. So I guess if it gets a bounce, it's a sale in here, and you did a great job on it, Wendy. I just wish that the Bank of Japan would have waited for us to be able to get that trade-off in here as we talked about it. Kenny P. writes me, and he says, UNH, that is United Healthcare. He says, I've been looking at your patterns, looking at these cycles, and that sure looks negative to me. And he says, I'm looking for a spot to sell it, and I think it's right about here as this stock gets a move to the upside. So let's take a look at UNH and see what is he looking at on my charts that says it's a sell. Let's take a look here at the weekly chart first. And those people that are subscribers to the Slim charts will understand these color codings in here. And what this red means is it's in a declining zone. Where does that come from? Well, this cycle right in here, and then this one in here, and whoops, a breakdown and getting a retracement on the upside. This looks like stock is sub 100 if you come out to April in here. And of course, I think politics has something to do with it, but the whole pattern, the whole group patterns really looks negative to me. What about the entry spot that you're talking about? That is right at the resistance zone. You can see that right here, as it has not been able to get up here. Maybe the stock gets up to this 116 area, 1.5, 2 points more on the upside. But I think basically even these short-term patterns you see in here look to me like another down wave coming. And full disclosure, I'm short this one, UNH, and I think it is going to go down from this area, Kenny. So obviously I say trade it, and I already have. So that's a good one. Appreciate you appreciating me and that analysis, and great stuff. So thank you all for sharing in Trade It or Fade It, and we're going to do this again in another 3-4 weeks. So please get ready to share your ideas. What I do is send out an email, and people that are my subscribers then will know to participate about 2 days in advance of when I'm going to do it. So don't send the emails now. Wait until I let you know. That's it for Trade It or Fade It, and we will be back shortly with our short-term view. All right, before I get to the short-term view, I want to talk a little bit about our memberships. We have some great offerings in here in 4 levels of membership, and we really encourage those of you that are not members to come and look at our site, look at the membership options, and have the opportunity to get some detail and sign up for our memberships. Level 1, well, that's really this show, a few other things. That's free. You can go back and look at all of our show archives for Market Week in Level 1. Level 2 is all of our videos. We have 7 categories of videos that are super valuable to traders and to self-directed investors, longer-term investors. We've got some longer-term videos that we do in there also. We do videos 3 times a week for members, Tuesday, Wednesday, and Thursday, and in these really broad areas that I think are valuable to everybody. Last week we did stock sectors, where we look at the country ETFs, and some look at part of the energy sector, which we think is making a bottom in there. Of course, on every single Wednesday, we do our look at the futures markets in Future Speak, 25 different futures, where we do detailed cyclical analysis, look at weekly and daily charts, look at a lot of potential setups in there. And then Thursday, we mix it up with some other great videos in there also. So you're getting a ton, $27 a month for that. You could just try a month and see if you like it for all of our videos. Level 3, not only do you get everything in level 1 and 2, so all the videos, but also you get our rankings and setups. We cull down to our 70 best traders of stocks, ETFs, and futures, and look and rank them at 3 different time frames, long-term, intermediate term, and short-term. We give them rankings on the cyclical patterns also, and then we list things when they think they are setting up for entries on potential trades. So you get a ton there with all those videos. $77 a month. Give that one a try. You're never going to get so much information. And then our level 4 gets everything plus all of the charts you're looking at right now, slim charts for the TOS platform, and you'll be able to have all of that work on your platform. RV and I spend hours and hours and hours every single week doing this analysis and updating it and sending out these links with updates when necessary. So we've got just so much information that you can have. That's $147 a month to try that, and that is such an incredible value. I don't think anybody gives you that much information for that amount of money. All of that, if you sign up for 3 months on any of them, you're going to get a 10% discount. So I want to encourage you to go now to the askSlim.com site, go to membership options, and look at that. Sign up for a month, try us out, and I think that you're going to like a lot what you see there. And all of our members out there, I think that you can vouch for that. So send testimonials too. All right, the short-term view here, we do this every single week, taking accountability of what we said in the last week. I got to tell you, we were doing a lot better until Friday came because, well, the Bank of Japan, they messed with us. I think that was their intent, because like we had the euro really going the way we expected it to, doing nicely in there. Bond market looking like it was peaking. As a matter of fact, the 10-year gets up within 2 ticks, just 2 ticks through the level that we thought it was going to get to, and then turn down. And then Bank of Japan just drives everything with this trade. And I often say the news can't, you can't do that unless the market was kind of ready to do that, susceptible anyway. So while I put blame on the Bank of Japan for messing me up, it really, the markets were just ready for something like this. So let's take a look here, as we always do, 5 different markets. We're only going to give ourselves a 45% for the last week, and that's a poor performance for us. We like to be up in that 65-70% area, and again, we'd have done better if it was only Thursday right now. So let's take a look now at the light crude market, and we'll take a look at what we thought was going to happen in the last week, and then take a look at what we think will be coming now. So what we expected in here in the light crude market, let's just back up a little bit in here. You can see that we had a note here to our subscribers right there, where we were talking about that early breakdown that's right under here was going to probably send the market down through early February. So that would have taken you, well, right over here, right? You can see where that bigger cycle is. But we've got this strength coming in here. That is what we consider an early bottom. So we had expected light crude last week to have a bias to the downside. In other words, we thought it would get a bounce, get back up and test 33.35, and then move to the downside. So you can see we were right. I mean, we really thought it would get up to this level here, and then we thought it would roll over, but it's hanging up there a couple of extra days, and that really says to us that a correction in here, which is due right now, is not going to get down as far as we thought, and that the big low that we were looking for is in place. So yes, we were bullish on the intermediate term. We thought that there was a bottom setting in place. This to us is a confirmation of it. You see the minor support level right over here. We say the major low is in place. We're going to look for a test somewhere in here of about, we'll call it 31.20. That's right, like in the middle right over here. We'll just call 2-3 days on the downside like that, and then getting ready to turn up again. So this pattern in here overall giving us a pretty good look. We'll call the market down up on the week, test that support zone right in there, and then move back to the plus side. Take a look at the gold market /GC. What we thought in this was that they would move in a range, and our range that we said was 10.98 to 11.28. It actually moved $10 higher. In other words, the bottom of the range was 10.98, not 88, and the top of the range was at the area of 11.28, not 11.18. So the range we were looking at, we thought it would chop around, kind of move up, down, and that it would be moving down in here. And we talked about this in Traded or Faded also, that this time period of a week or week and a half is a corrective period. So we're about half right. We were right about the shape of what was going to happen. It just got up through our resistance area by a little bit. Now you see the engulfing pattern here. So we think we're in a little short-term correction in here. We're going to look for this area of 11 to 11.06 to hold it and to be the short-term buy zone, and then have another big up move in here. We're loving silver, so I just want to put a little note out there that in our rankings and setups, we've just caught the whole silver move and then reloaded in there. So you want to just take a look at that level 3. I think we've been doing astoundingly well in there. Got a few trades wrong. Bank of Japan hurt us on our treasuries, but overall that is been a great product. So take a look at that service and look in here between 11 and 11.06 for the pullback, and probably a tiny down week for the week, but I don't think it'll be much change, and I think that is the buy zone right there. Next one we're going to look at is /6E. Now what we thought was it would be a little bit of an up week, and that it ultimately could get up to 111. Now, you can see what happened the first 4 days of the week right in here. This is exactly what we expected. We thought it would test this area of 110 again, which it got up, close to it right over there, and then it would eventually get up in the next couple of weeks to right here, 111. Now, I got to tell you, the scenario has changed a little bit. In that this big decline, which was just because the dollar rallied so much on the Bank of Japan action, that really does change the scenario somewhat. So we still think that the dollar is in a corrective period and is going to give up a little bit of ground. We're down to about 2 weeks of time where we expect that. And really what we're expecting in here is that we're going to get a small up week like right in here, and then probably more of this correction in here. So we're not as optimistic in here. We're going to call it a small up week. As I said in Future Speak on Wednesday, that the time was really running short for this move up in the euro currency. We're going to give it just another week or potentially week and a half in here on the upside, and not getting as far on the upside as we originally thought because of that. So no longer aggressively bullish in there, but we still think it can move to the upside. And if it gets underneath this area right over here, that low, we'll call it 107.90. That would be a really bad sign if it does that in these next several days. And then we're just plain simply saying forget about the long side even having a chance even for now. So this is an important area. We still think it's going to be a small up week for the week. /ZN. Now, this one, of course, this action today is a total shock to us and to the markets too. What we expected, well, we had this warning here, it was going to roll over. This warning here of all of these dojis that it was going to roll over, hanging man. And we thought it would get up to, for the week, around the area of 129, which was the resistance. So you could see right here, it got up through it by a couple of ticks here on Tuesday, then started to roll over, and then comes out this news and it moves up through this resistance area right there. So this is this changes this scenario in here because it uses up some of this time. You could see the cycle pattern right in here. That's this one right here, and that says you get a minor pullback in the next week. There's a outside chance you get down to the support zone, but I have a feeling it's not going to be able to get down that far. More like this support area at the 13-day moving average, 128.16 is kind of the area that we think it might be able to get down to, and then after that back up again. Really craziness would be 128.03 or 4. Boy, that would be a shock. And then up again. So overall, this scenario really calls for a minor pullback and then up again. And we were looking for this kind of action over here and then up again, and tried to thread the needle here on a negative trade right there, a short-term swing trade. Sadly, now we're just going to hope that it pulls back in here as this pattern suggests, and then to just say we're out of this one because it didn't work. So that's again, Bank of Japan helping this market in here. So now let's talk about the stock market. Last week we expected that it would get up to the area of about 1914, 1915 and then fail. Man, did we get that. We almost nailed it perfectly. And big move to the downside. We had a couple of scenarios in there that we thought both bearish, one more bearish than the other, and we actually picked the more negative scenario as we thought the highest probability. That actually looked like it was happening, and then again on Friday that really changed. So we're going to take a look here at the daily chart in the S&P 500 SPX. Now, the intermediate pattern in here in the S&P 500 looks to us like it's made a bottom. A lot of the stocks, supportive stocks, are also looking like they have done so. Also showed a number of those to you in the show already, and that is suggestive of the fact that when corrections come, they're not going to get that deep right now. But we think this is a temporary upside correction in a very bad market. And I think there's some clarity now in these patterns that we didn't really have before, and we're, I think, going to have better patterns to follow right now. So we saw the market do exactly as we expected, and then moves up sharply on Friday, and that does have a message in it. So now you can see in here we have some revisions to our patterns. For those people that get our charts, there's just a few other little notes in here, and that is that this probably made the bottom, high probability, to the intermediate pattern. And here in the short-term pattern, we're now in this kind of a rising pattern right there. That's this cycle bracket right over here for those of you that follow our cyclical analysis. Okay, so here's what we got. We thought it would get up right to this resistance zone and turn down. That's what it did. Then we thought that this pattern, this might take it down and follow that. Well, that's not what happened. So it's really this one that we're now focusing on, right? What does that mean to us? Well, we think that the upside retracement that we're in is limited. And right over here, we'll call this 1946 or so, 1947, as to where that resistance number is. Outside of this is 1978, and I don't expect it to be in this upswing that we get there. So we're getting a huge move and a lot of short covering coming in on here on Friday. Opens on the bottom, now on the top. This is called a shaven bottom pattern, and those are bullish when they happen. Not only is it bullish because you already have an update, but it says there's a lot of momentum in there. So that really increases the odds we're going to get to this 1947 number before this one rolls over. And then after that, we get a correction that takes you down over here, which is in this area of about 1900. Now, the 1900 number is probably not available in this next week. It's probably the week after, based on what this counts are. So we're going to look for this sell zone to be valid, but we're going to look for it to get to the top of the sell zone really before this upside momentum ends. So a 1947 is our number, then 1978, which we think is a low odds possibility. So we'll look for another few choppy days on the upside in here, and then test that number and then start to roll over and pull back. Right now we're going to look for that range of 1947 and around 1900 as the range that's likely to hold the market. Now, we were looking at the VIX and saying that the implied volatility was telling us that it was likely the stock market was going to get up and fail and then go down again. And so we looked at that VIX chart and said, well, that was supportive of that. Well, the VIX chart changed and giving us a different message right now. So we want to follow what that's telling us. And I think it's supportive of this scenario that I'm talking about today. So we're going to put up the VIX chart, and I'm going to show you in there what happened. So here is this VIX chart, and we were looking for this up move in the VIX and implied volatility, and we got it. We got it 3 days ago, and you could see that big spike right over there in implied volatility, and then it broke down under this level. That is supportive of the fact that it's not likely to end the consolidation in the VIX until about, we'll call it February 15th or 20th. So there is quite a number of weeks that we can get some upside chop. And if you followed us, we said that once we get this intermediate bottom, we could get a number of weeks for the stock market moving to the upside as an upside correction in a big decline. Well, this is supportive of the fact that that's where we are, that the intermediate pattern has bottomed, and we can look for an upward bias in the chop just for this intermediate term, some number of weeks. This helps us see that number of weeks period. So we're looking for the stock market to pull back, chop its way upward for a while, and right now we'll look at that 1947 to 1900 range. That range could move up to the 1978 number on the upside if we get through that level. We don't think it's going to happen now, but it could happen sometime in the next few weeks. That is a look at the short-term view. Hope you love this show. Hope you thought the information was valuable to you. Let Trader to Fade It, you like that one, let us know about that. Don't forget, go to askSlim.com, membership options. Take a look at that. Sign up for a month. Try us out. I think you'll love what we do. We do a ton of work, and it's all about raising your probability of success. We hope this is a great weekend for you, and of course, we are always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show.